Hey everyone, welcome back to Corporate Decoder, the place where we delve into the world of corporate filing so you don't have to. Today we're diving into the deep end with AB Variable Products Series Fund Inc. It sounds pretty dull, but trust me, there's some interesting stuff lurking beneath the surface, like why they're flashing QR codes at you in the reports. This report covers the year of 2024 for a few different investment portfolios under the AB Variable Products umbrella, specifically looking at their annual shareholder reports. Think of it as a report card on how well they managed your money if you happen to be invested in one of these. We will take a look at ABVPS Dynamic Asset Allocation Portfolio, ABVPS Global Risk. Allocation Moderate Portfolio, ABVPS Balanced Hedged Allocation Portfolio, ABVPS Relative Value Portfolio, ABVPS Sustainable Global Thematic Portfolio. Let's see if they are naughty or nice, and if we should put our investment money somewhere else. First up, the Dynamic Asset Allocation Portfolio. We need to know what it costs to run this thing, right? Well, for every $10,000 you had invested in Class A shares, it cost you about $90 in 2024. For Class B shares, the costs were about $116 per $10,000 invested. That cost is a percentage called the expense ratio. Class A was 0.85% and Class B was 1.10%. So for B class, it's a bit more pricey to have them manage your money. How did they do with your money? Well, the report says the Dynamic Asset Allocation Portfolio didn't perform as well as its benchmark, the MSCI World Index. It's like saying they didn't win the race, even though they were trying. The balanced approach of investing in both stocks and bonds, 60-40, it's held it back compared to just going all in on stocks. During that year, the team expected the economy and inflation to balance. Because of this, they tilted the assets to US stocks. Unfortunately, the returns were not as high as the benchmark for the year. What worked and what didn't? The team overweighting equity assets and focusing on US technology companies helped, while fixed income investments and international assets dragged down results. Here's where it gets interesting. There is a comparison of a hypothetical $10,000 investment over the last 10 years in different indexes and classes. The portfolio's performance reflects applicable sales charges and assumes the reinvestment of dividends. This chart, for example, is good for Class A shares. It seems like the indexes have performed better. The report comes with a warning though, past performance doesn't guarantee future results. Take it all with a grain of salt. And now for some hard numbers. The average annual total return for Class A shares of the portfolio for the year was 10.65%. But if you look at the 5-year return, it drops to 3.40%, and the 10-year return only gets you 4.07%. The MSCI World Index, by comparison, scored much higher. Again, though, this is all historical and doesn't mean it will stay that way. As of the end of 2024, the portfolio managed about $251 million. They had 1,501 different holdings, and the portfolio turnover rate was 11%. This means that the managers were not swapping too many assets. All in all, the advisory fees totaled $1.7 million. What was the fund invested in? Well, the top 3 holdings were Apple, Nvidia, and Microsoft. The rest of the top holdings were a mix of US treasuries and tech. You can look at the percentage as it relates to the fund for each security and also see the split in assets. Common stocks at 64.7%, and governments at 33.7%. And now we have a bunch of boilerplate mind how to get information and who to call. Let's gloss over this. Okay, on to the next report. Next up is the Class B report for the ABVPS Dynamic Asset Allocation Portfolio. Much of it reads the same as the Class A report, but it also includes a QR code for easy access to the reports. In fact, each of the annual reports has a QR code to access the portfolio. How nice. You already know the expense ratios. Class B cost about $116 for every $10,000 invested, and their expense ratio was at 1.10%. We have another helpful chart and more data on the asset allocations. Let's keep moving. The numbers are similar, but the class type is different. Let's get to the next portfolio. Okay, next up is the ABVPS Global Risk Allocation Moderate Portfolio. Maybe this will be more interesting. The expense for every $10,000 invested in Class B shares. This one cost you about $79 for the year. The expense ratio for the Class B shares were 0.74%. How did the portfolio perform last year and what affected the portfolio's performance? The portfolio did not perform well against its benchmark, and the report states the portfolio's equity downside protection via equity index options detracted from performance. Finally, the portfolio holdings. Security type breakdown is common stocks, 63.9%, governments treasuries, 2.7%, purchased options puts 0.1%, short-term investments 31.6%, other assets less liabilities 1.7%. Okay, let's move on again. Next, we have the ABVPS Balanced Hedged Allocation Portfolio. A key difference here is an addition to the highlights is there is a top detractors from performance. It is included with the top contributors to performance. Let's see what that is. The expense for Class A shares was $69 for every $10,000 invested, coming in with an expense ratio of 0.66%. How did the portfolio perform last year? During the 12-month period ended December 31st, 2024, all share classes of the portfolio underperformed the Morgan Stanley Capital International All-Country World Index MSCI ACWI, the benchmark net. The portfolio's more diversified approach, which balances exposures to equities, bonds, and risk management techniques, is expected to underperform the all-equity primary benchmark during normal and rising markets. During the period, equities and fixed income assets contributed to absolute performance while risk management techniques detracted. What exactly are they invested in? Investment companies 87.0%, inflation-linked securities 3.1%, purchased options, calls 3.0%, purchased options, puts 2.4%, short-term investments 8.9%, other assets less liabilities 4.4%. All right, on to the last annual portfolio. The final report we are covering is ABVPS Relative Value Portfolio. It's the same story. Class A shares cost $64 per $10,000 invested, or 0.60%. And how was the performance during the 12-month period ended December 31st, 2024? All share classes of the portfolio underperformed the Russell 1000 Value Index, the benchmark. Overall sector allocation drove the underperformance. Gains from underweights to materials and real estate were offset by losses from an overweight to healthcare and an underweight to utilities. Security selection was positive and added to gains, led by selection within consumer staples and technology. Selection within industrials and energy detracted from results. Now here's a new disclaimer in this report. The addition of the S&P 500 Index broad-based benchmark provides a comparison of the portfolio's performance against the broader market as regulatorily required. So it looks like regulators want a more broad comparison. What are the main asset allocations? Financials 23.2%, healthcare 17.4%, industrials 15.1%, consumer staples 9.5%, information technology 9.3%, consumer discretionary 7.7%, energy 6.4%, communication. Services 3.9%, materials 3.2%, real estate 0.8%, short-term investments 4.9%, other assets less liabilities 1.4%. Okay, no surprises. And this brings us to the end of the report. So there you have it. We've decoded these somewhat tedious reports and summarized the performance and investment positions from them. What are my thoughts? The good news is that these AB Variable Product Series funds seem generally well managed and diversified. The bad news, if we look at the returns and the benchmark comparisons, the reports were not amazing, with several underperforming their benchmark. However, I like the diversification, which probably led to that underperformance, and I would favor it over higher risk plays in the current environment. In this environment, this would be a neutral leaning towards a buy for me to hold and reinvest. I suspect a reasonable target price would be in a range of 9 to 13, with potentially more growth as the team keeps tilting to what works with a little balancing. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more Corporate Decoder content.